everybody, welcome to Day Trader Next Door. Today is Thursday, the 9th of October. Doing a Q&A today. The last couple of days have been just kind of jammed up with appointments in the city yesterday and some in town this morning. So I want to take today and put out some questions and answers at least. I filmed some on Halloween, and that's what you're going to see today. But I didn't really get an ending to that video, so I looked at it and there's already plenty enough there that it's probably enough for one video anyway. So we're going to have a shorter one today, and I'm going to do the rest of them. I never really totally keep up, but I'm going to try and get a bunch more of them out to you soon also. But in the meantime, here's the Q&A for today. Good morning, guys. Today is Halloween, Tuesday the 31st of October 2023, and I'm not going to be trading this morning. I was hoping to, but just kind of one of those things in the morning is not going to work for it. I've got to take two of our rescue cats to the vet. I already took one because we couldn't catch the other. Now I've got the second one with me to go to the vet, and I'm going to pick my son up from work at 11 o'clock. So I'm not going to try and jam a training session in there. It's not really a good idea. But what I am going to do is try and ram through a bunch of your guys' questions. First thing I wanted to mention, yesterday's trade, it was kind of interesting because the place where I had kept talking about as a target is exactly where price turned and went back down in the morning. A lot of you guys are saying, "Oh wow, you nailed that exactly." I just wanted to make a little comment on that. First of all, I didn't know it was going to stop there. There's no secret to that or anything. I just thought, as I always do, I pick kind of a place above and a place below and where I think price is more likely to stop and turn around. And I figured it would either be at that 84, because that's only because there was a whole bunch of stuff to the left of the chart at 84. It's a serious resistance there. Or it would try and make the run to 4,200, so I didn't know if it was going to be the 84 or the 200, but I figured it would probably be one of the two. And honestly, there's nothing particularly insightful about that, or it's no predicting the future really or anything. It's just look to the left of the chart and know your previous day's levels, and those are the places where price most likely runs to, and most often runs to and turns at, and that sort of thing. So really nothing extraordinary about that at all. And you guys can do the same thing. Scotty Harp had a question that I've talked about a bit before, and it's a recent question. I'm going to get to the older ones, but it's a good one that I just thought I'd quickly mention. What's your deal with, looking at the prices in the 20s, 25s, like essentially the quarters and 50s and hundreds? Why do you look at price around that? It's funny because I've literally always approached price that way from a long, long time ago, and I really haven't heard anybody else that talks in that way. I just kind of assumed it was more common, and surely there are others, but it's just not something that people. I kind of bring this idea, and then it's like this whole new kind of idea when I just kind of think it's common sense. I do that because just after watching charts for the first couple of years when I was really trying to get this figured out, I noticed that a lot of the times in certain things, like the indexes, the ES, just because of the kind of price of the index, not so much with the Dow because it's so big, but with the Dow, it would be more cut into 50s and 100s as opposed to, the 25s don't matter as much. But all kinds of other instruments, they tend to go back and forth between those in terms of like quarters and halves and wholes. And I kind of equate that to being because that's the way that we think. When you're thinking about the price of something, you think, is it $10 or is it $10.50 or is it $10.75? You don't care if it's like something costs $9.90, well that's $10, or if it costs $9.49, it's $9.50. If you want to give your kids some money to go do something, I'll give them $20. You're not going to give them $13.49, right? It's just we think in that way. We think in like quarters, like the coins, quarters and dollars and half. It's just common fractions. It's the way that when we're thinking about money or we're thinking about costs or just thinking about even cutting up a sandwich, we think in terms of halves and quarters and wholes. And that's why I think of price in that way. To me, prices say prices at 4,100 until it goes up to 4,105, right? If it goes to like 4103.50, and if it goes back down to 4101.50, well, to me the price is at 250 because it's clearly shown it can go there, but it hasn't broken above or below it to the next one yet. So it's just, to me, it's kind of common sense. It's the way that I find it easy to think of price, and I find that price very often moves in between those, and that's why I call it, micro support and resistance, those little levels as it goes back and forth. Oh, the small town Canada landscape. The No Frills and the Tim Hortons, right there. Actually, answer one other quick one I noticed Scotty posted a while ago. Whenever I get out of a trade, what am I doing? Generally, I'm just hitting the flat button. And he says, does that get you out at whatever price it is now? Sort of, yes. It gets you out at wherever you can get filled next. So ideally, it's going to be the price it's at then, but more than likely, it's going to be a tick in the wrong direction from where price is when you click the flat button. Question from Dave NB about being Canadian and trading futures. I've talked about this before. I'm probably going to make another video. I've had a lot of people asking about brokers and stuff, so I'll probably make another, kind of intro video, an updated one of the one that I link all the time, because a lot of people clearly haven't seen that. So he's essentially wondering what's a good option for funding an account as a Canadian, and Interactive Brokers is pretty much your only realistic domestic option. If you want to keep your money at a Canadian broker where it's 100% insured, etc. Dealt with Interactive Brokers, but I don't like trading futures with them specifically up here, especially up here, because the commissions are way higher and the margins are way, way higher. So I would much rather have a small amount of my money on deposit at a U.S. discount futures broker, knowing that money is at risk, very small risk, but if there's some huge systemic problem, there's always a possibility that the broker goes bust and I lose my money, or I lose most of it, or I go without it for a long time till I get some back. We've all seen brokers go bust. But I'm willing to take that risk on the small amount of capital I have to keep there to meet my margin requirement, as opposed to in Canada having to keep way, way more money there and pay way more transaction costs. So I much prefer the idea of a U.S. broker that will service Canadian clients. There's not really a ton of them. App has been absolutely excellent for me, as has Ironbeam. So those are two that I can recommend. Synchronelli has a question about trading the Qs as opposed to trading the NASDAQ futures. Now, I haven't traded the Qs. Okay, I mean, I know what they are, etc. But I've only really traded the indexes on a CFD, on the Forex side originally, and then as futures contracts. Now, from what I see, the movement is very, very similar, and from what I also see, the liquidity is also very good. So I don't see why you can't do that, really. Of course, going short is more difficult, but then you can use the Qs to triple short or whatever. So there's ways to do it. To me, though, if you're going to day trade, it just makes sense to use futures. They're made for it. But the movement, from what I can see, is very similar. Along that same line, and I don't have the question right in front of me, so I'm sorry that I don't remember who it was that asked me, but it's just in the top of my mind. Essentially, the question is, why would the ES respect, say, the big numbers, like hundreds and fifties and previous price levels and stuff, which it very clearly does? Like, how does that work? Because isn't the ES just a computational sum, average, weighted whatever of all the prices of the particular stocks? And the answer is no, it's not. And that's why it works the way it does. The ES is not the S&P index. The ES is a futures contract on the price of the S&P index at a particular period of time in the future. And as such, it is an instrument that is traded by people. And that's why it works, where they respect previous levels and they respect big round numbers and things like that, because it's not a mathematical calculation. It's an actual instrument that is, being traded, contracts being traded back and forth between people. Just to go back to Synchronelli's question, I missed the last part of it, and I want to make sure that you get this answer. They've been watching and trading the Qs for about a year, wondering, will that transfer well over to an NQ chart, futures chart? I sort of missed that part of the question. Yes, I believe that will transfer over fantastically well. I think that if you've gotten good at trading that and you can trade that, you should be well prepared to trade the NQ. It's going to be a little bit different, but the actual price movement and what you're used to, I think, will translate very well. I'd encourage you to try the futures. I'm probably going to get this wrong. Li Hong left. If you don't mind, how long per day do you trade, and how long do you think a person who's learning should look at the charts per day? Okay, how long a day I trade is generally how long you see there. Now, the video may only be 10 minutes long, or 15, or 5 or 7, or whatever, but, typical morning of trading is going to be maybe as short as a half an hour, as long as maybe 2 hours. You can just check the time, the time in the corners of the margins of the video, and you'll see how long it's actually been that I've been sitting there. So I'm very much for a short period of time, because I think you get fatigued. I certainly get mentally fatigued, and I can't focus for as closely as I need to focus for all that long. So I try and keep it to a couple hours. As far as how long should you be watching the markets, as somebody who's learning, not trading but is learning, all that you can, really. I mean, you don't want to overdo it to the point where you get sick of it, or you're just kind of staring at the screen blindly and not picking up what's happening. But if you're somebody who has time to sit and watch the market, which I think is one of the most important things to do, is to just sit and watch the market, jot down the price, make record of the price, and see what it's doing and observe its behavior when you don't have any skin in the game, so you can objectively watch what happens. If you could do that for, say the entire morning session as often as possible, I think that'll be fantastic. You can't really put too much time in the market if you're able to stay, aware and soak up what's actually happening. Observation is very important, and as much time as you can spend at that is great. Would I sit 8 hours a day and watch the market? By the end of the day, you're going to get pretty fatigued. But even if you can get some morning sessions in and just watch it, it will not be time wasted. The Narc, or 3Narc, has an excellent question. Essentially, he's asking, for a beginner, what do you think makes more sense? Ram through a bunch of paper trades as much as you can and just, get the practice of it over and over and over, or watch a lot and take very few trades? So that's a great question, and honestly, either one can work. But I'll tell you what my preference is. I prefer the idea of lots and lots of watching. Okay, so spend lots of time watching the market. But I also very much believe in, as you watch, and you learn things, you will see what things you're more often going to have. What are your higher probabilities, kind of general behaviors of the market. So I'm an advocate for lots of watching, but even from early on, getting used to being picky about choosing your trades. So I don't really recommend just trading all day on paper, over and over and over, trade to get the practice. Because that teaches you really bad habits forward down the road, because you want to try and minimize your trading. You want to be able to be picky and discerning of which setups, which trades you take. So I would say spend all the time you can watching the market, but really practice on nailing it down to, okay, I'm going to trade the morning session, I'm going to allow myself 3 trades, or maybe 5, but no more than that. I like the idea of 3. And that's going to train you right from early on to be patient and to wait for the better setup. And if you're used to that and you never go through even a practice time where you're just mashing the button over and over and over, I think there's less chances that whenever you get in the heat of the moment with real money and you start to get the lizard brain, I think there's less chance you're going to actually act on it if you're not used to smashing the button, buy, sell, buy, sell. Anyway, guys, that's probably enough to digest for now. Keep your questions and comments coming as always. I really enjoy doing these. I look forward to doing more. Grab my cheat sheet and newsletter, daytradernextdoor.com. There'll be another one coming out soon. Thanks so much for watching these as always. Have a fantastic day, and I'll see you again soon.